Yes, okay. Yeah, let's just start. So for this video, I thought I would just go over the basics, like the actors of the market, who's trading and where are they trading, so we can understand how the marketplace is actually kind of built, right? Um, for this example, I don't know what I think it's best to use something maybe like oil because you can probably relate to that, or we can also use just gold. I think gold is a little bit better in this case. I'm seeing something interesting already on gold, but okay, let's see. So I might need a whiteboard or something. Here I got a whiteboard here. So start drawing. I will start to draw. At least I will try. My drawing skills are not as good as Ray's, so I will give my best. So okay, let's have a look. Okay, so mostly what is a market doing, right? A market is sometimes like in a kind of balance area, like it bounces from range to range. It goes like this, then it goes like that, and it's noisy, right? So what we do know is that this is two-way money, right? So if I just go, this is two-way because we have sellers and we have buyers below the market. Writing with the mouse is really cool. But okay, um, and what are they doing? They're basically building the marketplace, right? So somebody says, okay, this price is too high. I will sell here. Uh, Buyer says I buy here. Seller says I sell here. Buyer says I will buy again. Sellers will sell again. Buyers will buy again. And this time, maybe perhaps sellers say, oh, you know what? I'm gonna offer at the 50. The magic 50. The 50 is always like the point of control. If you control the 50, you control the market. So the market might break lower, and then there's a decision, right, from the buyers. Do we buy this or don't we buy this? And in this case, let's say in this case, they bought it, right? Let's say the market was going from here like this, like this, like this, and it came here, right? It's clear that the market was sell side, right? Sell side. But at some point, the market stops being sell side, obviously, because the value is shifting, because value is the main driver for every market. And so in this case, let's say the value is perhaps doing this, right? It's also dropping in blue, but it's kind of starting to improve in this point, in this bottom edge, right? I think I have to draw this from from beginning because it starts to get complicated. Okay, let's erase everything, everything. Clear. Yes, clear. Okay, I start from new. Market is dropping. This is like a trending market, right? This is a trending market. Now that looks better. Good. So what do we have? We have level 1 liquidity here at this point, once this breaks. Then the price does a pullback, right? This is like a strong high. This pullback is likely to be a sell point. So we don't try to buy this here like the commercial, because the commercial is red and he's buying this breakout. He got no problem buying this low. And the HFTs, the prop traders, like they try to sell this pullback, right? Sell this pullback. So the commercial is obviously buying the breakout lower, right? And the prop is trying to sell back into that liquidity level here. And this can go forever, right? So we have to kind of think about it. Commercials are buying on downticks and props are always trying to sell on upticks in a downtrend. So in a downtrend that could be anything, like you have a moving average that goes like this. So okay, all I can do is really just sell these pullbacks, right? And we will get to that later. But at some point, the market goes higher, right? Creates this liquidity level here, does something like this, perhaps, maybe even goes lower, takes out and goes back. So this now is not really a break because the market starts to be balanced, right? It starts to create a balance area. And then what we see is sometimes a lot of noise, right? So perhaps something like this. It looks all kind of stuff, right? It doesn't have to make sense in a balance area. In the balance area, just liquidity is important because this is one-way money, right? This is one way. The money is just going down. But now this is like two-way money. So we know there is a shift taking place. And this is where levels start to get important because if we have a big key level, imagine like here's a big key level, right? This is why the market is actually stopping because there's a big key level here and there's likely a lot of profit taking because this could also be like a measured move down. So we know this is likely profit taking on the first low and then accumulation on the second, third, and fourth low. So we know here's like a higher time frame key level, and this could be anything like zeros, 50s, 25s, RGL, order block. We will come to all these things, for value gap, whatever, right? Basically. So all these kind of things. And what happens here is a lot of accumulations taking place, right? Until we see a shift in something that's called value. Value is green in this example. Let's say value is following price, right? And at some point here, it starts to improve, something like this, right? Value starts to improve while prices in an accumulation phase. And this is what the commercial is actually doing. The commercial, I put it again in red so we can understand, is buying this here, right? He's buying this here because slowly he sees value and he's buying bigger size as here. So he's buying bigger size here. And he's not only buying here, but he's also buying in the 50. So on the way down, he's buying small portions here. At this breakout, he's buying probably here, but he's buying all these low prices. You have to imagine that. So now we have a picture. The commercial is long, is net long. The market makers are also long because what is the market makers model? The market makers model, I need a different color, aqua. The market makers model is to actually also buy when candles are red. Like, I'm sorry, undo. Like the candle is red, market maker must buy here. Okay, so next candle is red, market maker needs to buy at the close of this candle. So then the next candle might be green. The market maker is obviously selling at this point, right? Then the next candle is maybe again red, and the market maker needs to buy again. So we know also that the market maker is net long in this position, and they will have to redistribute basically at a better price. So the market maker is basically short here. He's long. He's actually long in these pullbacks, right? Like it goes lower, he's going to go long here, here, here. Then price pulls back, he's going short here, 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 basically on this up move. And at some point when there's a balance area, the market maker has to kind of the best business model because he can just buy and sell, and he's making good profit, right? The market maker's basic model is just to profit from the spread. The spread is wide when the market is trending, and when the market is narrow, the spread is tight. So there's a lot of business going on here. And this is good for the market makers because the market makers, they will obviously sell on the move up and buy on the move down. And when price just goes sideways, they make a lot of money. But we cannot trade like the market makers because the market makers are just liquidity providers. They do nothing else. They just provide liquidity. Let's say I want to buy 10 lots at this price now, at this price here. The market maker will have to go short at this price, but he will not give me this price here on a downtick. He will give me this price here perhaps at the breakout, right? He will give me a bad price, so he will withdraw liquidity, right? So he will sell, in this case here. But at some point, this is the funny thing. When the price is not going any lower, I need to take a different color. When the market is not going any lower, this is when the market maker realizes that there is somebody above the 50 crossing the spread, right? So somebody is constantly buying up this 50 price. And this 50 is important because at this point, when the market maker no longer wants to sell, he will not sell, he will pull away his liquidity. He will say, I'm not going to sell here because there is a top edge here, right? He was basically, the props were selling here, but they were not going to sell again here because they see that the market is not going any lower, right? So what they will do is they pull away basically the liquidity, like to the previous high, maybe to here. This is where they would like to sell, right? At this previous high. And the market will just, like you obviously see, rip fast, make a small pullback, and then just go fast without much pullbacks in the opposite direction, basically. And this is like, it looks stupid, but this is like how the market really looks like if you think about it, right? So let's take a chart and just see that this concept here is basically correct. So we don't go on daily chart. Let's go to an hourly chart, and we take gold because gold is like the best example. And we go to Friday on a lower time frame, on the 15-minute perhaps, right? So I can put this away. And as you can see, obviously, we had a big rip, right? And we have to try to identify what this rip is. Like, why did this happen? And then we start to look at the price action. And we start to look from previous day, from the RGL, right? We start to look from 1930 basically. So this time, this is UTC plus, I'm sorry, this must be, yeah, this is UTC plus 1. So it's basically now 2030. I'm not sure. Wait, I need to, London time. It's 1830 basically in London time. So
Actually, the gold price that we talk about when we want to enter the position, I guess
yes,
that was 1840 around. That was also a nice setup there, which can
this
take
trade here.
um, no, no.
Uh,
Earlier, when we talk about entering the
you mean,
position about gold, yeah.
yes. Like we were talking about the sell trade, I think. Like
No, no, buy trade to hold. That 1840 was the price when we thought
1840.
of the, yeah,
Ah,
that
1840. Yeah,
which,
yeah. This was before the war came out. This
yeah,
is like long ago. Yeah, we were talking. Okay, yeah.
yeah,
Let's. This is perfect
this
example. Yes,
situation, yeah,
because if you look at this, right, if you look at this move here, then you
yeah.
see a grind, and then you see the move on the
Actually,
opposite side.
actually, yes,
It
I
looks
have seen,
exactly the same, right?
yeah, yeah. I have seen this in the, I guess, 1 hour chart. This is more clear in 1 hour
Yeah,
chart.
I think it's like clear on the most charts, but this is basically what we were just talking about. Good that you said it. It's perfect, basically,
Yeah,
because what happens here, right? The cross on the EMAs, it's not that important, but you see, we get a cross on the EMAs, and the market starts to just trend and trend and trend, and at some point, there is no trend anymore. There's just this two-way money, basically. Yeah, right. We can mark it up exactly like I just basically pointed out. So it's easier to understand for beginners, right?
yeah,
But this is just what we talked about. This is
yeah.
exactly this, right? It's just like
And
textbook.
it is also happened when you said that Nifty is on the buy. It
Yeah,
was on
y-
the measured move. The same
yes,
thing
exactly.
because there was like L2 graphs.
Yeah,
Okay,
exactly.
continue. You continue. Okay, you
Yeah,
continue.
no problem, no problem. But we will go to Nifty later.
Yeah, yeah. Later.
So yeah, basically this is it. But now we have to kind of identify how do we enter because this was NFP Friday, right?
Yeah.
NFP
Actually,
Fridays are
you have the what button I say going back button, like you have the premium membership of trading, you know.
nope. No, I have the normal version.
Okay. Then we can now exactly. Just continue.
Okay. Yeah, I think it doesn't really matter in the end because what is important is just to see how this is happening on all markets, because it's not bound to one market. This concept of commercials buying on the downtick, basically, right? Just think about that. They even start to buy here. I'm not saying they need to buy full size, right? But they're buying these dips, they're buying these dips, they're buying this dip, they're buying this dip, and as it goes lower, they buy a lot here, and they buy a lot here, and they start to buy inside this balance area, because you can see the change from black to green, right? It starts to become more greenish here. And at some point, they accumulated enough size to let the price just move. And this is what I mean by the withdrawal of liquidity. I think this is a really important concept. Like, this was NFP Friday. And if we are aware of this kind of setup, right, then you obviously see we get a pin up, and then we retrace back down, and we get a pin here, and we are just sideways. We go back here and we reject that level, right? And then NFP Friday, we have basically a news catalyst, right? We have NFP, and everybody knows NFP is volatile. So with this information, we should already basically know, okay, it's NFP. If we likely to dip below this low, I want to buy everything below this price, everything below. Or you can say, okay, I'm gonna put a buy stop in here when it comes back into that range. So I know it sounds kind of corny, because you say, oh, you can never do that, right? You can do it. I mean, it's not impossible, because you always need to have the bigger picture in mind.
Actually, I
In my
did that. Actually, I
Yeah,
did that
I
in
know.
that
You did that on your demo.
account.
You showed me. You
Yeah,
showed me. I was kind of expecting it, but I didn't want to trade it. So I
yeah,
said, okay, you know what? On Monday, probably we will get a retracement. So I wanted a retracement back into this level here, into this last toxic order block, right? It never happened. It just continued because the war came out, and then things just escalated. So there's nothing you can do about it. I know it sucks, but this is just part of the game. Sometimes you miss these great moves, even though you knew the bias, because we were talking like earlier, right? We were talking about gold bias because it was dropping and dropping, and I said to you, like, yeah, this is going to be a buy trade, but we have to wait because it's not clear. And this
actually,
was this
if
was
we
really,
consider this accumulation area, so
yep.
how long it is? It was around one whole day. No, one
Mm,
from 3 to 9.
it was. This is
Um,
this is days. This is in days. You have to understand. Like, it really started here on Tuesday, 3rd, 4th, Friday. Yeah, 3 days, basically 4 days. It took
yeah,
4 days at the bottom edge. You have to imagine 4 days of accumulation bottom edge, right?
plenty of
And
time.
all these lows. Yeah, 4 days is plenty of time, because what do you need to do as a commercial? You buy the swing lows, right? You buy the swing lows. Like, for example, this is a swing low. You know, my problem was, I thought we have a key level here. And I was
Yeah,
so kind of, I was expecting it to hit, but it didn't hit. It hit on the futures. On the futures market, it hit that level, but not on the gold USD, basically. So this is really pity, right? But okay, still, we have a key level here. We have a 25, and we have now this first volume. And this, I'm not saying buy this one. I'm not saying buy this one. I'm saying wait till price reacts, and then actually look for lower prices after this one, because this is one. We can classify this as one, actually. I need to just check. Look, one here, and we do text like 20, like 20. So we know this is one, and we never want to buy the first fade, right? But when price goes below it, then we can actually think about it. But we have to wait for our reaction. This is important, right? So this is two. Now, if we get three, three is like the giving move. This is like the last move that you ever need. Like 1, 2, 3 fade, it's always like it. Every market will have this 1, 2, 3 lower, because this is how a commercial accumulation actually looks like. You have one, then you have two, the market responds bullish, and then there is no structure break in here. And then there is three, and three is usually the last low before the markup phase. And in this case, This is the markup phase. You see, we get small pullbacks, no pullbacks at all, basically. And from here, the market goes a little bit sideways, right? But at some point, it just goes catabolic, like it goes like one trading day, 4%, 5% here, 8%. Like this is 8% here. No, okay, 4%. I'm sorry. But it's like it's 400 pips, man. You know, it's like no, it's 600 pips. Yeah, I'm sorry. It's like 600 pips in one day, right? And this wasn't even the finish. So it made a small pullback. It was a little bit sideways, but you still see the toxic candles in here, toxic green moves, toxic green moves. Only here at this point, now we're coming back to somewhat, even this was toxic, right? Even this was toxic, so it will still be careful to sell it, but it's a kind of slowdown, you see? So we get here another level to liquidity, basically. And what happens? The price goes up. So people are buying all these dips here, still at these higher prices. This is like crazy. Like the people just know, okay, we have to buy gold now because it looks really simple if you think about it, right? But the ability to spot this here and to time it right, like on a 1 minute or on a 5 minute, this is the hard part because you have to be on the screen when it happens. Because when you say, no problem, I'm gonna wait till Monday, Monday market is gonna open and I'm gonna find an entry there. And you will never find an entry and you will just miss out on what is 1600, 1700 pips. Yeah, 1700 pips with one lot
Actually,
is
the main
$70,000.
the main psychological problem with the traders that they don't want to see the channel in red.
There's
So
somebody wanting to join. Yeah, I just saw it.
that's the main problem with the traders, because we always think that if we enter in the position, price must go up. We never want to see the red bars in
Yeah,
our
exactly,
channel,
exactly, exactly.
So
We
that's the
always wait for
major
best
problem
price.
here. Yeah.
Exactly, we always wait for best price. There's somebody new. He just went out. Okay.
Just add the RGL part in this
The
structure.
RGL part. Okay, okay, okay. So, okay, RGL. Let's see. Let's see. The RGL for gold is my time, 1950. So I can show it on the futures. On the futures, it looks better. It looks better. But basically on the futures, this is the RGL, right? In this case, 1925. So in this case, it would be, wait, let me just check. 1925 is the RGL for gold for the whole day. And then there's another RGL, but we will come to that later. So this is the RGL for gold. And if I go to XAUUSD, it should be, it must be, I'm gonna pull this up here so I can see. It's October 26th and it's here. So this is the RGL in this case, yeah, 25, the 25 candles here. And I'm gonna do it green, right? And this is for day trading. This is not for like macro swing trading. You can apply it, but you can already see. This is like the market is closing here, right? So for gold, you use a bigger range because gold is not such a liquid market as oil, for example. And I always like to use basically the candle low, candle high, and perhaps like just adjust the figures, right? It doesn't really have that much importance. But you want to treat this level here always, just mark up the time. It's 1925 on the Thursday, 26 October before the time changed. So you have to convert that. What is your time now? This is, you
Plus
are in
plus 150 plus 530
plus
30
530
530 Kolkata. Yes, Kolkata.
here.
Kolkata.
Which one?
Kolkata. About 530.
Kolkata here. Okay, Kolkata. So good, good, good. Okay, so basically this is the time for you in this case, right? So it's 22:55. It's like really, really late. But still, you can just mark that level out. And the next day when you come to your charts, right, you see the market closes and it opens. Basically, what happens is the market drops in your overnight session, right? So good. What happens? We pin this again. Here's another one. Somebody wants to join. Let's wait. Maybe he will come in. We probably have to do a little bit more sessions. Where is he? Here. Hello? Okay, good. So I was just talking about this RGL. This is, I'm gonna keep it quick. This is an important level because as you can see on the New York volume, this is like the highest volume candle coming into the close. The time is in your time. Hello, Kolkata. Right. I hope
Hello,
you
one
can.
second. Animesh, hello, Animesh. Uh,
I think it's him.
Hmm.
It's
Okay,
okay. He can watch the recording if you want to.
okay, yeah,
So
yeah,
this
yeah.
is basically
Continue.
the RGL, right? For the entire next day. So for the Friday, this is your RGL, and you want to keep that in mind. So in this case, let's see. We all can already see, okay, we have a couple of pins here, pins here, pins here, right? Can we trade them really? No, because the market is still buy side. So we are a little bit cautious, right? We have a failed auction here. We cannot simply sell here. It's hard because we are in a buy side market. We have to remind ourselves. So it's easier for us to go buy side when this level breaks. So let's see. The level breaks, right? Good. And we have now what is called a bigger structure break in this case, because we didn't break this low here. This low is like an X area because we didn't break it. It's a fade auction. This is what's called a fade auction. We didn't take out this level, and we did take out the previous swing high, in this case here, get a small pullback, and this is actually where we can try to offer into. We didn't get the perfect order block entry, like, it's not always perfect because you wanted to hit the order block, it doesn't hit the order block, and then it goes without us. So let's see. We just
Just
follow the
add
tape.
the price acceptance concept in this.
Yeah, exactly. We just look at confluence, right? We look, okay, we're buy set above. How possible is it that I will trade now perhaps this here, right? This order block here. If I hope these guys know about order blocks. If not, I can just do a quick video. But
He
now
know,
we
he
are
know.
okay, good. So you see, we have this RGL, and this RGL is kind of green now, right? It starts to turn from 10 minutes left. Okay, it's kind of starting to get green here. So we have to be mindful of that. And also, wait, let me include the Tokyo Open real quick so I don't forget it. Where is Berlin? The Tokyo Open is 2 o'clock. It's basically 3 o'clock. I'm sorry, here, 3 o'clock. This big volume is okay. So this big volume candle, this is the on the futures market, 3 o'clock. Basically, this is like Tokyo Open, right? The Tokyo Open is also important, but you see the Tokyo Open hits the RGI, right? So you can kind of use the close here, but in the end, you just see it's an area, right? It's still the same area as this here. So let's see. This is funny because I was actually talking to a guy about this. Like I was actually looking at the short trade because I didn't want to buy it. I wanted to flip RGS sell side. Also, Ray did say that it should be sell side because of the value, but we will talk about that. We'll talk about that later. So yeah, at this point, this is like the London Open. The London Open is the next RGL. So you always wait for these levels and wait for basically for a reaction, right? You wait, what are the London guys doing? So in this moment, this is just a consolidation like we had before, right? Like we talked in the beginning, this is two-way money here, up here. But what can we see actually? Commercials are doing what? Commercials are doing in this period are doing what? They're selling on the upticks, right? So we must be mindful that okay, this might develop into a sell trade for the time being. We're not interested in trying to be too buy side because it's Friday and usually after such a rally you don't really try to be a buyer. But okay, we will see. We will see because we just try to mimic the narrative, right? We try to be buy side above and sell side below, in line with the auction. So we read the tape, and now we see, okay, somehow we have a failed auction to the upside, right? We have no higher highs anymore, so we need to be kind of careful, and we have a lower low. So the price breaks down. The price breaks down aggressively, and it takes out this liquidity level. At the moment, we can only sell pullbacks because the EMAs are now open, right? So from this point here, the EMAs are open. We are below RGL. We can only sell pullbacks. So the first pullback, where would the next pullback be? 50, right? Swing high, swing low, or this would be basically the swing high. This cannot break anymore because this high here caused this move, right? So in this case, we want to see a 50 pullback, and the maximum should be a 25% pullback and not more. So let's see what happens. Interesting, right? Really interesting. We get that 25 level here. And we don't go the full measure. We don't go the full measure because there is news, right? But the sell trade had to come in, right? Just from structure. The sell trade had to come in. So in this case, we're still sell side. We can't be buying. I know it sounds stupid, but we can't be buying. So we have to now accept this here as our new high, structure high, right? I will try to do it as clean as possible. Come on. I will try to do it like this. So now you see the sell is not starting to work out because let's say you sold this pullback here. It went lower, yes, but it didn't make a lower low, right? So in this case, now you have a failed auction downside, and you do not, after a failed auction downside, you do not want to sell the next higher high here. You can actually, you can sell this last order block. It's super dangerous because news came just out, right? We had a pullback here. You can say, okay, this was kind of an order block. You can really fight about that, right? You can say it is an order block. It's not clean, but you can't deny that it's not an order block, right? It's just not possible. So what happens? We get this pin bar here, we get a toxic move, we get another low, and we move up, right? So this is already kind of a toxic rejection. This is a level 2 here. It doesn't look like a level 2 because there is no pin bar attached, but on a 50-minute, there will be a pin bar because this candle and this candle will be together. So basically it will close here, right? This 50-minute candle will close here and it will close as a pin bar. Let's just take a look. We look. Okay, it's not a pin bar in this case. On a 30-minute, probably this is the pin bar, but on a 30-minute, it's probably some kind of pin bar, these two candles together. So on a higher time frame, basically, right? This order block still works, right? For the first time. It goes lower. This is the pin bar, basically, but we marked it out. And what happens? Price is not going any lower, right? Price is going lower here. It's going lower, okay. But still, it's not going below this low here from this order block. So we have a new balance area, right? We have a new balance area, and what happens? We break that balance area aggressively, obviously, right? And at this point, you can only be buy side. Let's say there is I'm not saying you would trade a breakout, right? But in this case, yeah, you could have traded a breakout and you would have been amazing, but it's just not possible, right? So let's see if we can actually spot now what we saw here just on a 1-minute time frame, right? So I'm gonna delete everything and we will just focus on this price action alone, on this balance area from here to here, because price never once left this balance area, right? Like you could say, okay, this is New York. This is like the new kill zone or whatever you want to call it, right? Like this is pre-New York. This is like the news. But at 15 o'clock, basically, New York starts, right? And this is all the pre-volume in this case. So we see there's a lot of pins at the bottom edge, then a pin here, then we don't get the top edge, we don't get the bottom edge, we go just really random, right? Price action is random. There's nothing you can do here. What we do want to see is a breakout. We have to see the breakout, or we have to see that the moving average is actually widening and the structure is also shifting. So we have to mark inside this balance area, we have to kind of mark these highs and lows out, right? Even though it's like a shitty job, right? We have to mark them out just to see who is actually like in control of the marketplace. So I'm trying to do it quick. I'm trying to do it quick. All these highs and lows, right? They all get taken out, highs and lows, both sides. So that's how we know we are in a in a type of balance area, because there is just liquidity grabbing, right? They just search for liquidity. So see, now this is important, because now we take the 50 approach, right? And I'm just gonna pull the balance area like this. This is the 50, right? This was like the 50% POC. I'm trying to make it quick. And we have to wait till price is above this box for us to get involved in this type of price action. If we want to enter here, we have to have confirmation basically that price will rip higher. So let's look for these confirmations.
Well,
If I go here now,
if we think about ICT concept, so the 25 or 75 in your favor, it's his buy uh, area.
yeah, I know, yes. You can use it, but it's still dangerous, right? But let's make it, we can end it, right? Because look, in this case, I'm just gonna mark it out quick because we have only 1 minute, but we can do another zoom, right? But in this case, look what we have here now, right? We have like a top edge, and now we get failed auctions, and we start to see somewhat of order block rejections, right? This was the last toxic move. Then we get a pullback in here. Now you can even use the balance area inside the balance area. I know it sounds corny, but it is really like that. It's fractal in nature, because look, this measured move here is an exit point for somebody. Somebody is exiting here, right? This is where you get the move down. But you see, once we are above this 50, the EMAs cross and the move is toxic up, right? You have like really, you say, man, I need to get into this buy trade. I have to buy these pullbacks, all pullbacks basically, because you see a massive change of structure here. We have a breakout of this previous high, and now we have little pullbacks. So you say, I need to get my hands into these kind of pullbacks, right? Even before the RGL comes. Because the moving averages are, look at the moving averages, they are already splitting up, right? They're splitting and they're going up, and you say, I cannot be a seller. So if you cannot be a seller, what can you do? You can buy on downticks, right? You buy the down candles. It doesn't matter which one you buy, but as long as you just get busy with it, you get busy, you can just try to somehow get into these black candles and